to be speaking with you. Firstly, help us with your take on the Nifty as well as Bank Nifty, because just yesterday we have seen Nifty holding above that 25,000 mark, but Nifty Bank, that was languishing behind. What is the trade setup looking like for today?
Good morning to everyone. Yes, absolutely. It's positive at the moment, and we can see a positive opening as well today. Overall, bias positive, as we've been talking in the last couple of weeks. Bias is positive. After a 6 weeks of negative close on the weekly charts, we've got a positive close last week, and the trend continues now. On the uptrend continues. I'll be expecting a target of 25,250. That will be my first target, and the next target would be 25,550. So these are the two targets I'm looking for. The 2040 daily moving average, which is around 24,750 and 24,850. So these are two very crucial support levels, and I'll be expecting markets to not go below these levels. Absolutely. Looking at the large caps like Reliance, Bharti, Infosys. Infosys just joined the party, so Infosys, HCL is looking good. Looking at these large cap stocks, I think the markets are ready for the new medium term uptrend, and overall looking great. Bank Nifty, again, I'll be expecting a target of 57,000. That will be my first target. Above that, of course, 57,000. And the next target would be 57,500. So these are the two targets I'm looking for. 56,300, 400 would be a very, very crucial level to watch out for Bank Nifty. The next level on the downside would be 55,100, which is a very crucial level for a medium-term outlook. So yes, buy on decline should be the strategy. And PSU banking is looking great. The smaller banks like Canara Bank, Punjab National Bank, Bank of Baroda, all of these stocks are looking good. But wait for a breakout, wait for the previous swing highs to cross, and then enter them. Canara Bank and Bank, I think Canara Bank has already crossed the previous swing high. So Canara Bank would be my preferred pick.
Okay, quite interesting. A bias towards some of the smaller banks. Just looking at the market texture though yesterday, once again, you had the consumption theme, Somil, and a newer set of names which propped up. Everything from a Britannia to an Indian Hotels as well. What within the consumption pack is it that you're liking?
The whole pack is looking great. Marico has already broken out of a very crucial levels, and has given a very good run up. Even HUL is looking great. HUL definitely is looking great. But my preferred pick would be Dabur and Tata Consumers. So these two stocks have very good risk-reward ratio at this point of time. Tata Consumers has broken out of an ending diagonal pattern, and I'll be expecting a great rally here in the medium-term outlook as well. In the short term, there is a very good positive momentum here. So I'll be expecting a target of at least 1,200 on this stock with a stop loss of 1,075. And Dabur again. Dabur, a huge HNS, a huge head and shoulder pattern, and I think it will break on the upside. I'm just preempting that for a medium term outlook, and for a short term, 520 would be my stop loss, and targets would be 565.
Tata Consumer and Dabur India in particular for the consumption story, and we did see those stocks doing positive around 2.5% upsurge in the last trading session as well. We'll talk about the other sectors also which were on the focus radar and which can have an uptick and upsurge momentum in the session today. But then Bajaj twins it is, and brokerage reports in particular for Bajaj Finserv. Jefferies has initiated coverage on Bajaj Finserv with a buy call. They have identified key tailwinds that is aiding the company. Varun is here with more details on the brokerage note. Varun, over to you.
Definitely. So Bajaj Finserv would be in focus today because Jefferies has initiated coverage with a buy call and a price target of 2,420 rupees. Now this implies a more than 23% upside from yesterday's close. Now they say that the company would benefit from several tailwinds like lower rates, improving profitability in Bajaj, Alliance Life Insurance, and also profitability growth, and also motor insurance hike in the Bajaj Alliance General Insurance. Now, they say that the exit of Alliance will and the entry or the tie-up of Jio and Alliance will actually not impact the group, that is Bajaj and also Bajaj Finserv. And there are several other ventures which the company is actually entering into, like the mutual fund, the healthcare, tech ventures that will actually add to the overall tailwind for the company. And that's the reason they have actually initiated coverage on Bajaj Finserv with a price target of 2,420 rupees, and that implies a good 23%, more than 23% upside on this stock. So keep an eye on both Bajaj twins, that is Bajaj Finance and Bajaj Finserv as well.
Okay, that's Bajaj Finance. That's definitely going to be one stock which is going to be on our radar this morning. But very interesting comments coming in from the Russian embassy. Remember, Minister of External Affairs Jaishankar is in Russia. And talking about India buying Russian oil, the embassy has put out a statement saying US tariffs on India for crude trade are unlawful, stating that India's purchases would be unaffected by global tensions, with Russia that is, and special mechanism to address potential consequences is what they're putting in place. A 5% discount for India, subject to discussions, is what they're willing to offer. So it seems like Russia doesn't want to let go of India as a trading partner and for us to be buying crude from there. But we'll track these developments closely. For now, we're going to take a very quick break. You've got the GIFT Nifty, which is once again indicating a very, very quiet start. The implied open holding at that 25,100 mark. So let's see what stocks actually propel us forward. We'll discuss all of that after this very short break.
Number, I think the growth challenges still sort of persist. And I'm not too sure even in the second quarter, we are going to see a major perk up there. And which is why, while yes, price-wise, we have seen decent amount of damage, more of a time correction is what I would expect. And that is where the challenge lies, because I think it is very difficult to sort of take a call on a big market like US where 50% of the revenues are driven. And which is why we are still not really chasing IT stocks at this point in time. Selectively, one can be positive on Coforge or something like Persistent because of the relative better growth metrics they offer. And also because of the fact that BFSI as a vertical has been sort of doing the heavy lifting for some of them. Otherwise, I think I wouldn't really be chasing US exposed sectors or stocks from that perspective, at least in the near term.
Somil, for so long, it's really been about Coforge and Persistent, which have been the favorite on the fundamental side. But what about on the technicals? Do you think there is any trading opportunity in any of the IT names?
I think on the IT side, I'm pretty positive in the very short term because we've seen very good moves yesterday, and TCS, Infosys, all of these stocks are looking really good. Coforge has taken support at 200 daily moving average. Still trading below 40 daily moving average, but 200 daily moving average, very crucial support for a medium term outlook for a stock, and it has taken support there and shown very good momentum. So Coforge, I think, looks positive here with a support around 1630 and for a target of 1840, 1850 levels. But I'll wait for the stock to go above 1840, 1815 level for a positional trade, not for a short-term trade. Short-term trade definitely looks good. My preferred pick in IT space would be HCL Tech, and HCL Tech target would be around 1540. Good correction in the last couple of months, and now consolidating around 1400, 1450 levels. So I think from these levels in the very short term, 1550 would be my target, and above that 1620 would be my next target. But I will wait for a medium term call or a positional trade to be taken here. Short term trades are fine on IT side, but for a medium term trade, I would still wait.
All right, so HCL Technologies in particular, if we talk about the IT sector, 1520 the first target and then 1620 is another target. But while we always speak about the IT sector, and with the start of the earnings season, it was a miss on the larger IT players as the earnings were weaker. But then now we see a comeback for the IT sector, and we categorically did also mention that keep an eye on the mid-cap IT players because that's where the conviction will start following in. Pankaj, having said so, and talking about the second half of the year, at least the first half of the year, we did see a lot of challenges coming from the global front, and the Indian markets had to digest a lot of uncertainties. Talking about the second half, it started with the earnings season, which was a mixed bag. But after that followed some good positive news from the government, liquidity scenarios, the economic indicative action, and economy-wise, the data structures look positive. What do you think is the trigger, and do we see the festive mode coming in for the domestic market and an upsurge from here on, at least for the next 5 months?
Oh, yes. I think second half looks quite good for a lot of sectors. So, for example, cement, while Q2 might be soft because of monsoon, I think overall sense is that EBITDA per ton is going to be maintained. They already had a good Q1. And so that is one of the sectors which is expected to do well. Similarly, even for steel, while we are not expecting EBITDA per ton to sort of improve, but we will definitely expect a lot more better volume growth, and that should sort of drive. On the consumption side, I think a lot of triggers are in place. I mean, be it FMCG names or be it the auto names. I think we are pinning a lot of hopes on the second half for volume to sort of get revived. Up till now, the volumes have been muted, but we have good enough triggers right from GST to sort of AIDS pay commission coming into force probably next year. And on top of it, the tax benefit. So I think the entire consumption as a basket looks good. Then I think some of the even niche consumption categories like, say, hotels look particularly good to us. So that is another sector which is expected to sort of do well. So most of the sectors are sort of looking good. In fact, we are also sort of looking at some of the tier two beneficiaries of real estate. So for example, pipe sector, our sense is that in the second half, they'll see benefit from channel inventory refilling. On top of it, I think better volume growth is what we would expect. So accordingly, we would like even Astral and also Supreme. So I think we are expecting second half to be a lot more better. Even for a big sector like banks, I think second quarter we'll see the maximum margin pressure. Q3 onwards, things will start looking up even for banks from a margin perspective. So from that perspective, I think second half looks a lot more promising, and which is why we feel that overall 27,000 kind of a levels in Nifty should not be a big challenge, except for sectors which are export oriented.
Oh, well, yes, these are some of the sectors that Pankaj was just flagging off, but amidst that, it's the pipe companies that are going to be in focus, Supreme as well as Astral, what Pankaj just highlighted. And today, of course, we also have a note coming in from Motilal Oswal where they're saying that the PVC pipe sector is set to rebound as the key triggers align. Just yesterday, we were chatting with the management of Supreme Industries as well as Astral, and they were saying that the DGTR's ad recommendation on the PVC pricing, that will actually help their margins to grow. It will help the overall sector to garner more sort of a capex in the times ahead. And yes, of course, very good moves is what we are getting to see on both of these counters. But along with that, Somil, let me come to you. The other sector that is a buzz is actually the whole FMCG and the staple basket particularly. Just yesterday, what a great move in some of these counters. I know that you have flagged off some of those like Marico, I believe, was on your radar. But along with that, any particular take on HUL, Britannia or Colgate?
HUL looks definitely good from that pack. I like Dabur. I like Marico. Tata Consumers looks good. HUL looks good as well, but HUL does not have the risk reward ratio because it has already moved up. So I will be expecting this stock definitely positive in the medium term outlook. In a huge inverted head and shoulder pattern has broken on the upside. I'll be expecting a target of around 2,800, but the stop loss is a little deep because it has moved up very quickly. The stop loss is around 2550, so 2550 would be the stop loss, a little deeper, and the target should be around 2800, 2820 levels.
Okay, those are some interesting ideas coming in from the FMCG pack. Just looking at the market texture today, there will be lots to keep on our radar. The GST group of ministers have met for a rate rejig. So not just FMCG, but some of the two-wheeler plays as well would be under focus. So look out for the likes of Hero MotoCorp, what a Bajaj Auto, etc. also tend to do. And then, of course, the entire cement and FMCG pack as well. Also, Russia's 5% discount on crude. Look out for the moves on an HPCL, on a BPCL, Reliance, as well as GAIL. You've got the Agni 5 missile test firing, Bharat Dynamics, HAL once again come on the radar. So all these stocks is what we're going to be looking out for in trade. But on the insurance plays, Pankaj, we were just chatting with Niva Bupa as well. But HDFC Life, SBI, Star Health, Max Financials, given that GST on insurance premium has now been proposed to zero, what is your sense on whether they make for good investor cases or not?
So Aisha, I think second half is expected to be a lot better for insurance plays, but with GST at 0%, I think, and without input tax credit, I think there could be challenges in terms of margin because companies will be will need to necessarily pass on some benefit. So from that perspective, I'm not very gung-ho on a segment like, say, insurance. What we like beyond the non-lenders is AMC. I think the inflows have been pretty robust, and our sense is that overall AUM growth plus combination of inflows, I think this sector or this segment can easily deliver a mid to high teen kind of a growth from a longer term perspective. So again, companies like HDFC AMC or Nippon look quite attractive to us.
So not absolute conviction on the insurance play. We can keep the sector in the watch list for now. But then at present, if you see GIFT Nifty is flat 25,100 and above, we'll keep an eye whether 25,000, the level which we did keep intact in the yesterday's session, do we move ahead from it or no? It's a flat start, at least in the Asian markets, and the US markets overnight were also on a weaker note. We slip into a short break, but there's lots to discuss on the other side. You stay tuned.
Meet in September. My colleague Prakash is here with more details on today's meeting. Prakash.
The GST GOM on rate rationalization is scheduled to meet today, a very crucial meeting ahead of the next GST Council meeting. The meeting is also important in the context of a centre's proposal where it endorses two rate structure, essentially 5% and 18%. It is expected that the finance minister will address the GOM at the beginning of the meeting. In fact, she will present the centre's views, a very significant development coming in. We are expecting mega reforms under GST going forward. You are aware that the Prime Minister has already set the tone, in fact, made significant announcement from the Red Fort as there will be mega reforms under GST. Following that, the process has been initiated. In fact, the centre has sent a comprehensive proposal to GST GOM and state governments for their consideration, and it is expected that the GOM will have wider deliberation and consultation before finalizing its recommendations for next GST Council. Along with that, it is expected that there will be significant reduction after implementation of these proposals. There will be significant reduction in GST rates that will benefit consumers, traders, farmers, students, industry and key economic sectors.
Right, okay. That's the very important meeting that we're going to be closely tracking right here on ET now. But Pankaj, just want to get back on the GST theme. Given that, there is that rate rejig which is currently underway, what about the other beneficiary sectors? Aside of the obvious, staples names, what about cement, two-wheelers? Anything where you're building a positive case?
On the cement side, I think overall sense is that this GST reduction will lead to about 25 rupees kind of a decline in per 50 bag prices. So that is definitely positive, and we have clearly seen that last year growth was quite muted at 4%. This year we are expecting more sort of a normalized growth, and most of the pricing hikes have largely been sort of sustained. So we like the entire cement as a pack, right from Ultratech to Ambuja to even a smaller name like, say, Sagar Cement or even JK Lakshmi Cement. Besides that, I think auto is another big beneficiary. Our sense is that while two-wheeler is a sort of a penetrated category, but four-wheeler is something which would sort of do better. We have been already positive on a company like M&M. That has been our top pick. But our sense is that Maruti is going to be a big beneficiary of this, given the fact that car is an aspirational product and volumes have been sort of muted. So I think that our sense is that is going to be a big beneficiary. And besides that, in two-wheelers, we would relatively prefer Eicher Motor because that carries more of our aspirational products. The recent volumes have been pretty good. So I think two-wheeler and four-wheeler both are expected to do very well. CV, I'm not very sure of because you'll have challenges in terms of growth. Again, companies are guiding for mid-single digit kind of a growth. So somewhere down the line, I think that is a segment which we will not really chase so much. But PV and two-wheelers are definitely looking a lot more better with this GST cut.
Absolutely. A cement pack, while during the onset of monsoon, the seasonality factor plays for the cement sector. But at present, as we see, there's momentum in the cement pack. And of course, there are news flows coming constantly where Ultratech Cement is also planning to sell a stake in India Cement. I will give you the details of the same shortly. But then, Somil, what is your view on the cement sector, be it the larger cement players or the mid-cap cement players?
There are two names which I've always been tracking. That is, first is Ultratech Cement and Grasim. So these two stocks have always been on my radar, and I've been very positive on these stocks. Even now, I think there is a lot of scope in Ultratech Cement. The stop losses are a little deeper. 12,400, 12,200 would be my stop loss for the stock. But I'll be expecting the stock to go higher, above 13,500, probably above that as well. So positionally, Ultratech Cement looks amazing from here, and keep trailing your stop losses and aim for positional trades rather than short-term trades in the stock.
So like we were discussing, Ultratech Cement is planning to sell up to 6.5% stake in India Cement via an offer for sale. The floor price of the same is set at 368 rupees per share. Ashesha is here with all the details of the same. Ashesha, is stake sale in India Cement. What is it that we are gathering?
Well, yes, both India Cement and Ultratech Cement will be in focus on the back of this news, where Ultratech Cement is looking to sell nearly 6.5% stake in India Cements. This will be done via OFS. It will be open today, 21st and 22nd tomorrow as well. For non-retail shareholders, this OFS will open today, and for retail shareholders, it will open tomorrow. As far as the floor price is concerned, it has been fixed at about 368 rupees per share versus yesterday's closing price of 371 rupees per share, implying nearly 0.8% premium as compared to yesterday's closing price. And now remember, Ultratech Cement currently holds about 81.5% stake in the company. FIIs hold 3%, DIIs another 6%, and the rest with public shareholders. Now, as a result of this OFS, Ultratech's shareholding in India Cement is likely to fall from 81.5% to about 75%, and that will also mean that Ultratech will be able to comply with SEBI's minimum shareholding requirements as a result of this OFS. Now, just to give you a brief background, it was in July 2024 where Ultratech acquired 32.7% stake in India Cements, and consequently later they also acquired additional 26% via an open offer as a consequence of the acquisition that they had done of 32% of India Cements. So now their total shareholding stands at 81.5%, which as a result of this OFS, which is likely to happen today and tomorrow, will come down to 75%. So both these stocks are in focus on the back of this deal.
All right, thank you so much, Ashesha, for getting us all those details. So let's watch out for both of these cement majors. But other than that, in some of the other stocks in news today, all eyes will be on Godrej Properties as well, because Godrej Properties does emerge as the highest bidder for over 7 acres of land parcel in Hyderabad. But the project is estimated to have a revenue potential of 3,800 crores. Pankaj, just wanted to have your take on Godrej Properties. How do you believe that this news is likely to impact the stock, and along with that, help us with your overall sense on the realty pack?
On the real estate, yes, tax cuts and also the benefit of lower interest rate will start accruing, but that benefit largely will accrue to tier 2 or mid segment. I think the premium segment of the market has been doing already well, and the prices have been sort of captured. I don't have a specific view on Godrej Properties, but our sense is that at this point in time, overall, you have a segment or you have geography related issues. So, for example, I think e-Khata is sort of a bit of a challenge for Bangalore-based players. And in the NCR region, what we are clearly seeing is a super premium segment probably might sort of witness a moderate growth. So from that perspective, one needs to be very selective. What we are liking is big players like, say, DLF, which have got a balance between both annuity business and also the retail side. And similarly, Max Trades or we also like something like Arvind Smart Spaces. So from that perspective, one needs to be selective in real estate. I think the home building products or segment is looking a lot more better. We have we have seen decent amount of price correction, and I think things are going to become a lot more better for them. So the likes of pipe players. So from that perspective, more positive on home building kind of a segment, less on real estate.
Okay, that makes sense. And that's where you have slight amount of comfort in the valuations as well. But let's welcome on board Rajesh Palvia too and figure out what he's making of the market construct right now. Rajesh, hi, good morning. Good to have you on the show. We'll talk about individual sectors a little later, but Rajesh, the fact that we finally made it and closed above the 25,000 mark yesterday, what's your Nifty strategy for the day?
Good morning, everyone. Looking at the breakout about 25,000, it's a positive sign for the market, as market was struggling to cross 25,000 level since last couple of trading session. But now we are above this call concentration area of 25,000 strike. Looking at this breakout, we believe that if we sustain about 25,000